you hate the thought of working past 55 or 60? Do you hate not being able to live the life you deserve today? Do you hate not knowing what your financial future looks like? It's time to stop doing what you hate. Here's your host, Mr. Harold Green.
Hello, everybody. This is Harold Green of Brightree Financial Group, and it's time to stop doing what you hate. I'm excited, cautiously excited, to be bringing you folks today's show. Man, it's been a crazy week. Things have kind of been all over the place, and so I want to just kind of give you guys some advice in regards to how to hang in there. Well, not only just hanging in there, but also like how to thrive when everybody else it seems like they're going crazy and they're losing their mind. So again, it's been a crazy week, but I've had to put a lot of different things in perspective. And one of the things I had to really put into perspective again was this whole topic of ambition. And so we are in the ambition series. And just to do a quick recap, we talked about the first show was be ambitious. First of all, you got to be ambitious. And the last couple of things we did talk about was choose to be different and also the courage to succeed. And, I was listening back on the show, Courage to Succeed. And, I made the statement, I've never seen a superhero that lacked courage. I've never seen a scared superhero, but I've also never seen a scared villain either. So no matter what side of the fence you choose to be on, good or bad, it takes courage to pull off some of the stuff that you're trying to do. So I want to get into today's show about so many big things. There's so many big things that are going to be happening coming up. And I want you folks to be ready for some of that stuff. But there's one key thing that you're going to have to do in order to accomplish some pretty big things. And so are you folks ready? 1, 2, 3, let's get it. All right. So many big things. I want to talk about what has happened for the first month or so of, well, we're not even done with the first month. We still got like 8 days left. So a lot of stuff can still happen, but I just want to kind of talk about how things have started off for us in 2022. I mean, man, I came into this year very optimistic. I still am. Haven't changed my stance. Haven't changed my tone. I haven't quite doubled down on my positions, but I've added to them, and I'll talk about that because one of the things you're going to have to do is you got to be ambitious when everybody else is sitting there like the world's going to come to an end. And I've been looking at different reports and different things like that and talking about the sentiment of just people in the country, where things are at today. And thankfully, I haven't really had any clients calling me, afraid of anything because I've been communicating with them via newsletters and, text messages, phone calls. And if you are a client and you're listening to me, thank you for giving me the opportunity to serve you. But know at any time, if you have any questions or any concerns, feel free to get on the horn and give me a call or shoot me an email or shoot me a text message because we can talk about this kind of stuff if you have concerns. And, one client was telling me, she said, Harold, I hear a lot of stupid stuff out there, a lot of things, and it goes contrary to what you're telling us. It goes contrary. And I said, yeah, it's going to run contrary because people have reasons for the things that they say, right? There could be some sort of monetary reason why they're saying these different things. You got to be careful what you're hearing and then whether or not you're going to put that stuff into practice. And so, I want to talk a little bit about that. But the sentiment in the country, and, for very good reason, there's a lot of turmoil going on, a lot of big things that have a lot of people scared, pictures of empty shelves and all that. Like, I'll tell you straight up, like, if you live in a place where the shelves are empty and stuff and you can't find, man, it's probably time to move. It's probably time to move to a state where they have some common freaking sense where they can keep things stocked. I live out here in Hawaii, and one day I was talking to some ladies that worked at Costco, and we're talking about the supply chain crisis because I talk to anybody. I ain't scared to talk to like nobody. I'll talk to anybody about anything, even if I don't know you. I'll just start having a conversation with you like I've known you for 30 years. Like that's how I am. I love talking to people, and I love hearing what people have to say. I'm just weird like that. I'm just different like that. And so I said, so what about our supply chain crisis? Has it hit us yet? And they said, are we running out of stuff yet? Will we have that problem? They said, we could, but, Hawaii is a very unique place. And my thought process, as soon as stuff starts to be, missing off the shelves for an extended period of time, people are going to freak out. They're going to panic like they have done before. But it was quickly resolved because, again, you can't let that kind of stuff fester. Not here on an island. People would just be like, it would be like a free for all. But people are concerned. They are afraid, which sometimes, I don't really think anyone has any reason to be fearful or any reason to be afraid and to just kind of wig out. But there are a lot of reasons why people are. And one of the main reasons why they are is because of a lack of knowledge, right? Knowledge has the ability to calm things down. And so I'm going to be dropping some knowledge on you folks today. And the key takeaway that I want you to have from today's show is I want you to be able to keep your cool. Okay, so I'm going to share with you some things that hopefully will help you, if you are kind of weirding out right now or, frustrated or freaked out, you got to keep your cool. You got to calm down and you got to think about some things that you may be able to take advantage of in the midst of all of this turmoil, right? So you got to keep your cool because in the next show, I'm going to be talking about the land of opportunity. Freaked out people, they don't get many opportunities, right? Because they're always scared. They're always running around doing crazy things, making bad choices. They create bad luck. I really don't believe in luck, but I hear people talking about luck a lot and how you can make your own luck, good luck or bad luck, by the decisions and the choices that you make. So we're going to be talking about investments today, and I got to put the statement out there that past performance is no guarantee of future results. All investments, including real estate, are speculative in nature, and they all involve substantial risk of loss. And so you got to go do your own due diligence before you make your investment choices, your investment decisions. I tell people, if you're not working with me, go hire an independent advisor so that they can investigate for you. They can do some due diligence on building portfolios for you before you get started and before you invest any money. Now, I don't want you to be foolish. I don't want you to gamble, but you got to take faith-filled risk in anything that you do. And knowledge helps build your faith, right? Knowledge will help build your faith in something, right? And so I want to get into some analytics today and some analysis of some things. And I want to share with you a real simple thing to pay attention to when things are going crazy. So I picked out a handful of stocks that I want to talk about and what's going on with them. But before I get into that, a lot of this that I do for clients is baked in and built into the Rapid Retire program. And if you don't know anything about the Rapid Retire program, I want you to go to my website, brightfg.com, and check out the Rapid Retire program and just kind of look at some of the things that I have in there. And then a lot of this is going to make sense to you. And so inside of the Rapid Retire program, the main component inside for protecting people's wealth, I wouldn't say necessarily protecting wealth, but growing wealth, is the three buckets, the bucket concept of short-term, intermediate, and then long-term. Again, long-term is money you're not going to need for 10 to 15 years, right? We're talking about 10 to 15 years. And so I want you to keep these time frames in mind. And then the intermediate bucket is 5 to 10 years. And then the short-term bucket is from now and for the next 5 years, right? 5, 6 years, something like that. So this is what I want you to keep in mind as we go through this. One of the things I want to talk about is this high period of inflation that we're in. And it's not like this hasn't happened before. This has happened before. And it's going to happen again until the world ends. The world hasn't ended yet. And people talk to me like the world is going to end. Someday it might, but that's a very pessimistic view of living. And I tell people when they say to me, like, how bad are things going to get? And my response is, I wouldn't think about how bad things are going to get. But in other words, how good are things going to get for you? Like, what's the rebound? What's the comeback? What's the turnaround? What's the golden idea that you come up with in hard times, right? Because in tough times, that's when people make the most money, or they position themselves to come out like a champ on the other side instead of a chump on the other side. So I'm going to drop this on you folks today. And when you start to hear things about the market and recessions and bear market and all of these different things, think about the next 2, 3, 4, 5 years moving forward. All right. We're going to analyze a few stocks. We're going to talk about a couple of different things. We're going to talk about buying or holding the stock. We're going to talk about the 200-day moving average of the stock. And we're going to talk about the price to earnings ratio of the stock and how you have to think about these things. And in full disclosure, for me personally, because of my level of risk and my financial plan and my long-term goals, in my long-term bucket, I am only holding 3 stocks right now, and I'm adding to them every opportunity that I get. All right. I'm holding Microsoft, I'm holding Tesla, and I'm holding Apple, Microsoft, Tesla. I had to think about that one for a second. But that's all I'm holding. And so I want to analyze these 3 along with a couple of others and just kind of talk about what's going on with them and then give you a little bit of history about the highest inflation period that we've been in for a while, okay, over the last 10 years, because I think that's relevant. 20 years ago, that stuff really isn't relevant because technology has changed. Things have evolved so much. Things are different. And we got to look at everything with a different set of eyes, through a different lens, if I may say that. So let's start off with this conversation about rotating between growth and value, right? You hear a lot about that. Oh, we're getting out of growth. We're lightening our positions in growth, and we're adding value stocks. We're adding stocks that are considered value. And I hear a lot about this. What the heck is value? Well, it's supposed to be stocks that are producing results, earnings, paying dividends, but they're not overly priced, right? They don't necessarily have a high price to earnings ratio. And so they're calling those value stocks. But a lot of times people are lumping these names in together and they're not parsing these things out to see if it's really a value stock or are they acting like growth stocks, right? And that's very scary because the volatility is so high right now. The fear in the market is so high. People are selling stuff that they shouldn't be selling because they're scared. They're afraid, right? If this is money you're going to need next week, it shouldn't be in the stock market. If you're trying to make a quick buck, go find something else to do because the stock market isn't a place where you try to make a quick buck next week or you got 20 grand and you want to sit in there and I want to double it and make it 40 in 30 days. No, man, that's not how this goes. But there's a lot of people out there doing foolish and stupid stuff with money that they shouldn't be gambling with. And when you do short-term trading or buying crazy options and different things like that, trying to make a quick buck, that's gambling. That's not investing, that's gambling. You probably have better luck going to Vegas and playing slots. If you got 20 grand, take 2 or 3 grand, go to Vegas, play slots. You might come out with 10. And you may have more fun. You'll lose some probably. But playing like that in the market, that's no place to be. And that's why volatility is so high. And what exacerbates this is the machine buying and selling. So, the algorithms, they scan the internet for news. They scan thousands of websites looking for news, looking for data. What is Jerome Powell going to do? What do they think he's going to do? What's going to happen with Ukraine? What's going to happen with this place? And they're scanning all this stuff and they sell on negative news, right? And not even really looking at the fundamentals per se, but selling begets more selling. And people see that, right? Some days the market will drop for no apparent reason or it'll take off for no apparent reason. As a long-term investor with a strategy, you have to look through that and then look at the individual holdings in the portfolio. So these are all the things that are going through my mind because you know what I need to do? I need to keep my cool, right? That's what I get paid to do. I get paid to keep my cool. When you go see the doctor and you have a serious medical condition and you're all freaking out, you want him to keep you cool. You want him to tell you something that's going to help you calm down, right? You don't want to be sitting there panicking and then he's panicking. Then it's oh my God, we're both panicking. Man, you're going to die like that, right? Nobody wants to go through that. I want you to keep your cool. So let's take a look at a couple of different things. We're going to look at 200-day moving average. We're going to look at the market close on Friday, what happened, PE ratios and whether they're buying opportunities, holding opportunities, and then out of recessions, what happened in these particular holdings. So let's start with meeny, miny, mo. I'll take Amazon. All right. I don't hold any Amazon. I got out of Amazon a long time ago. And I call it a long time ago, probably last year sometime when I just felt that. And, when they were talking about unionizing at Amazon, I said, okay, there goes their stock. As soon as the employees are talking about forming unions, I'm like, okay, I'm out because their cash flow, they're investing a lot of their cash flow back into the company, right? Benefits, different things like that. So anytime they look at unionizing, that's just more cost. And that's going to have an impact on the price, and the shares are going to tumble, right? Regardless of whether or not they're a great company and they're pumping all this stuff out left and right. People, I still order stuff on Amazon, but I'm just not holding their stock right now. I've lost faith in their direction at the moment. Although AWS, which is one of their biggest income generators, Amazon Web Services, it is producing phenomenal results. But on the other side, on the warehousing side, the merchandising side, that's a different ballgame. So you almost have like two companies in one, and I think they ought to split themselves off. Honestly, that's my opinion. Okay, and have the technology side, and then the other side, the consumer side, right? The shopping and all of that stuff that they do on the other side. But I've sold them. They're trading well below their 200-day moving average. It was $33.91.70. That's their 200-day moving average, $3,391.70. Now, as of Friday, closed at $2,852.86 with a PE ratio, price to earnings, of 55.83. And the analysts and all of the charts are saying, don't keep holding Amazon. Amazon went from a hold last week to a sell, right? These things can change on the drop of a hat, right? The drop of a pen. These things can change. Amazon's out. So if I have any clients holding Amazon, I'm slowly getting them out of that position as soon as I can. Whether, and I have to look at how much capital gains tax they're going to pay, right? If their gains are going to be huge, then I got to kind of think about slowly getting them out of that. Or if the client doesn't care about the capital gains, and we can take the profits and pay the gains in them out. So that's what's going on with Amazon. I want to talk about a value stock per se. Procter & Gamble, right? Procter & Gamble, man, their stock has been going through the roof. Why? Because people have been rotating out of growth into Procter & Gamble. But the problem is their 200-day moving average is $143.69 a share. They closed Friday $162.62. They're trading above their 200-day moving average with a price to earnings ratio of 27.51. And they pay a nice dividend. So you're going to hear a lot of stuff about dividend growth investing. So people are rotating towards that kind of stuff. 3.48% dividends. That's not too bad, right? You can also find stuff like that in Verizon, which is like, I think 4% or something like that dividends. But the price of the stock doesn't move much, right? So you're going to have to look at that. Now let's go and compare that with Apple. And by the way, Procter & Gamble is a 3 for hold. They're ranked as a hold, not to be buying. But people are buying Procter & Gamble when they shouldn't be. That's just what I see in the numbers. They're a 3. Now, Apple traded at 148.042. That's their 200-day moving average. And they closed at 162.41 on Friday. So they're heading down towards their 200-day moving average. And their price to earnings ratio is 28.95. That's interesting. Their shares are sliding. They have roughly about the same PE as Procter & Gamble. But Procter & Gamble, they're going off like gangbusters. Because this is the fear element that's working here, right? People are rotating from growth to value. Has the fundamentals of Apple changed? Not at all. Apple is still a great company with great cash flow, with great balance sheets, and they're innovating like crazy. Like, why would you sell stuff like that if you know this? Well, because, again, people are selling based on fear. But for me, that represents some buying opportunities here soon. That's just me personally, right? I don't want you acting on any of the advice that I'm sharing with you in the show, because I'm giving you information on how to keep your cool and why you should keep your cool and why you should not panic. Microsoft, 200-day moving average, $293.90 a share. They closed at 296.03 with a PE of 33.12. I know this is all like nerd stuff, but again, this is what goes into helping you keep your cool. The more you know, the better off you are. Now, the thing about Microsoft is this. Once they get to trading at their 200-day moving average, man, it can be a scary thing for some people. And analysts look at that and say, all right, this thing can go one or two ways here. It can continue to drop like a rock, or it can bounce off the 200-day moving average and skyrocket, right? But here's what's happening. We have the highest inflation we've had in years for a couple of different reasons, all right? A couple of different reasons. I don't want to get into politics because it sucks. But everybody knows what's going on. People aren't stupid anymore. It can go one or two ways, right? Microsoft can shoot up or it can shoot backwards. And so for me, I'm looking at that very closely. And I'm in my own personal portfolio, I'm adding. Why? Because this is money that I don't need it for 10 years, right? I don't need this money for 10 years. And I don't think Microsoft is going to crash and go to zero. They could. I'm not saying they can't or they won't. I'm saying the probability is unlikely, and investing involves probability. You have to think these things through. And they're ranked as a buy. And the last one I want to talk about is Tesla. Everybody knows Tesla. I mean, this stock has just been hot, but now it's cooling off. Why? I mean, they report earnings sometime soon. Last time they did really well. They're delivering more cars. They make their own chips. They don't have a chip problem like some of the other manufacturers do. So what's up? Well, 200-day moving average is $814.69 a share. They closed at $936 a share Friday with a PE of $308.26. Man, that is high. But just because companies have high PEs doesn't mean it's necessarily a bad thing. Some of these companies are justifying that. They are producing results, and so therefore they're garnering these high PE ratios, right? Their price is just going through the roof. And at one point, Tesla had targets of $1,500 a share. I didn't check what they were the other day, but man, they're ranked as a strong buy. So in the face of all of this selling and people selling off their Tesla stock, the software that I use and the numbers I see has Tesla ranked as a strong buy, even in the midst of all of this craziness, right? And so I just wanted to share with you folks what this stuff looks like, right? What's happening right now as we go through this, where they're talking about raising interest rates. Even if they do raise rates, we're still at the lowest rates we've been at in like 2030. I mean, it's insane how cheap the money supply still is, right? How cheap it is to get loans and different things like that. So that's not necessarily something that you really need to be worried about. What you need to be concerned about is what position are you going to be in when the economy hits the restart button and some of these states come to their senses about how they're managing the coronavirus and whatnot. Some countries are already like, yo, look, man, we over this already. We're going to move on. We're going to figure things out. We're going to get our economy back cranking again, and we're going to take care of what we need to take care of. We're not going to play politics with this thing like some of these idiots are in our country, playing politics with something where politics shouldn't even be here, right? My wife and I were talking last night about how can scientists all over the world come up with different opinions when they're looking at the same data, unless their data is all like weird and manipulated. If I'm a scientist and I'm looking at the periodic table and another scientist is looking at the periodic table, it should mean the same thing to us. We should know the basics of the periodic table. We shouldn't be sitting there trying to interpret the periodic table based on our religious or political affiliation. This is just stupid. And I don't want to do that with my clients' finances. However, we have to look at what's going on and then figure out what position do we want to be in at the restart. I keep telling folks it's like the NASCAR wreck when they wreck up the cars and then they got to get the restart. So whoever gets the better restart, they usually end up finishing higher on the grid at the end of the race unless there's another wreck. So the restart is very important. So had some high points of inflation back in 2008. Things went crazy with the housing market. More free money pumped in to try to bail this stuff out. Made the economy worse. Stuff went down. And so we had a recovery back in 2009, right? January, the thing starts to recover. We get down to, or actually February, we hit bottom in February. In February of 2009, February 28th to be exact. Boom, that was the restart. And what happened? Procter & Gamble, they started to grow slowly. Microsoft, man, they started growing. Apple, they started growing. And within 2 years later, 2.5 years later, May of 2011, Apple was up 288%. Microsoft was up 51%. And Procter & Gamble was up 19%. Problem with Microsoft, they had all these antitrust problems going on. So that put a damper on their stock, and Apple just took off. So there are concerns about big tech being broken up, being looked at, but I think they're innovating, they're growing, they're producing results, they're coming out with better products every single day. So I'm going to say, don't start selling off all your portfolios and sitting in cash. But the name of the game moving forward is going to be rotate, rotate, rotate. You got to know when to move, where to move to. Of course, we're going to be losing money, but here's the thing to think about. If you're not selling shares of your stock and your dollar cost averaging into the stock, what's happening is when the restart goes off, then you're going to have more shares of the stock, and then you're going to have better growth because you potentially, because you own more shares. And so getting more of these shares when they're down is a very wise thing to do, depending on your risk tolerance. All of that has to be factored in. It depends on your long-term plan. And if you haven't sat down and figured out a long-term plan yet, I'd love to help you with that with the Rapid Retire program. We'll sit down, we'll do an assessment, we'll look at where you are and figure out, okay, what is it going to mean to you? I had a new client that just came on board. Super excited to have them on board. I don't want to say their names yet because I didn't tell them I'm doing a podcast show, but I'll share with them later that I do a show, and then they'll probably hear it. Super excited to be on board. And, we looked at everything and I said, what does it mean to you if I said, based on what I see or what I can do and the adjustments we can make, you can quit your job tomorrow? What would you say? And he just sat there and he looked at me like I'm crazy. And I said, based on what I see and based on what I think we can do, you can leave your job tomorrow. How does that make you feel? Oh my God. It was an exciting moment. And I love to have that for people that are just in these situations where, and this is what Stop Doing What You Hate is all about, because sometimes you do what you hate because of out of responsibility and different things like that. But I tell people a lot of times the reason why you keep doing the things that you hate because you don't know what else to do. Right? You've been doing this so long, it just becomes a part of you, and you just deal with it and you just put up with it. And sometimes it can have a negative impact on your relationships. It can have a negative impact on your health. And so I want to help you transition. If you're close to retirement, if you're in your 50s, 55, close to 60, and you don't know if you can get out, let me sit down and talk to you and then figure out how we can create this game plan to get you out the door, into the things that you love or that you would be excited about. Or just getting you into a period of life where all the pressure and stress is off, and then you can take a year or two to figure out what it is that you want to do. You don't necessarily have to have something lined up right away. If you can walk away and never have to work again, that's an option too. But I always tell people you want to have something to do in retirement to keep you active, to keep you growing, and to keep you making an impact in society, because that's a very important thing to consider. But keep your cool. Keep your cool. There's no need to panic, right? Even if times get tougher, there's no need to panic. Keep our cool, reevaluate, reassess, rotate, make adjustments, look for the opportunity. And in the next show, The Land of Opportunity, I think we live in the greatest country in the world. I'm going to be talking to you about things you can do to position yourself for the opportunities that are going to be coming your way. You can be bold and courageous and of good cheer and of faith and move out and conquer, pursue, overtake, succeed. Or you can hide, duck, run, be scared, and not really make an impact in life and live a substandard way. And we don't want that for you. We want everybody to achieve and to excel and to succeed and make an impact on society, whether it's giving to charity, growing your family, imparting wisdom to your kids, whatever it may be. So thanks for tuning in, everybody. And until next time, 1, 2, 3, let's get it.
This is thepodcastfactory.com.